Hey everyone, my name is Ian Obasi. Welcome back to the channel. Today, we are going to break down a topic that confuses a lot of people, the difference between accounting and auditing. Whether you are studying business, managing your own company, or just curious, understanding this distinction is key. So let's get right into it.
Welcome to Accounting Media with Ian Obasi.
First, let's talk about accounting. At its core, accounting is all about recording, classifying, summarizing of financial transactions. So, if you own a business or even just managing your personal finances, accounting is what helps keep track of all the money coming in and going out. Accountants prepare reports like balance sheets, income statements, and cash flow statements. These documents are essential for understanding a company's financial health. It's a continuous process that happens all year round. Basically, accountants are responsible for ensuring that all financial records are accurate, complete, and in compliance with laws and regulations. Now, let's move on to auditing. Auditing is a bit different. While accounting is about keeping track of financial transactions, auditing is the process of independently reviewing and verifying those transactions. Auditors, whether internal or external, examine a company's financial record to ensure they are accurate and free from any error or fraud. They don't just take the accountant's word for it. They dig deeper to verify everything. So while accounting is about preparing the financial reports, auditing is about verifying the accuracy of those reports and making sure that the company's finances are in good standing. Alright, so let's quickly summarize the main differences between accounting and auditing. So accountants work day to day to record and manage financial transactions. Auditors, on the other hand, typically work periodically, reviewing and verifying those records to ensure they are accurate. Number 2, accounting focuses on preparing financial statements, while auditing focuses on verifying the accuracy of those statements. Number 3, accountants are employees of the company, whereas auditors, especially the external auditor, is an independent third party, while the internal auditor is an employee with a separate function. Basically, think of accounting as building of a financial foundation and auditing as the inspection of those foundations to make sure it's solid and reliable. So why do we need both? Well, accounting helps businesses and individuals keep track of their finances and stay compliant with tax laws. Auditing, on the other hand, gives investors, regulators, and other stakeholders confidence that those financial records are accurate and trustworthy. Without accounting, companies wouldn't have a clear picture of their financial status, and without auditing, those financial records could go unchecked, which might lead to mistakes or even fraud. So, there you have it, the difference between accounting and auditing. To recap, accounting is about recording and organizing financial transactions, while auditing is about verifying those transactions and ensuring accuracy and compliance. Both are crucial for keeping businesses on track and building trust with stakeholders. If you found this video helpful, don't forget to hit the like button and subscribe for more financial tips and explanations. And as always, leave any questions you have in the comments down below. I'd love to hear your thoughts. Thanks for watching, and I will see you next time.